Do I make enough money to buy a house? What's the big deal with income anyway? What's up everyone? My name is David Tran with D Tran Home, and today I'm gonna go over the last part of our three-part section, which is income. Banks take a look at income because if they're gonna lend you money, they're gonna wanna know how you're gonna pay them back. Now what they typically do is they use what's called a debt to income ratio, where they add up all the debts you have on your credit report. That would be things like credit cards, auto loans, other mortgages, just any debt that's obligated. Now what they typically do is they take a look at the past 2 years and use that to predict the next 2 years. Now, if you're a W-2 employee, they basically just look at your last 2 years of W-2s and average that out. If you're self-employed, they take a look at your tax returns and see what you report to the IRS. Now, as a rule of thumb, you wanna be about a third up to a half of what your income is. So in other words, if your monthly payment that you're obligated to is $500 a month, your income should be over $1,000. Now, the other thing about income too is that it doesn't change your rate. All banks want to know is that you make enough to pay them back. Your credit will show whether you have a history of paying people back or not. Now, some exceptions to the income is if you're salary. As long as you have some history and you have a salary job, they can just use your salary. And if you're self-employed and write everything off, don't worry. They have bank statement loan programs for you to help you out. And if you have no income but really good credit, don't worry. There's actually programs for you too. Income can be tricky, and there's a lot of different situations that occur. If you have something you want me to take a look at, feel free to comment or send me a DM. If you found this helpful, again, please share with someone. And remember, make it a great day.